Some investors predicted the crash of internet stocks during the dot-com bubble years before it happened. They warned the market was in a bubble, and when the crash finally came, they should have been proven right. But many of them still lost money. How is that possible? How can you correctly predict one of the biggest crashes in history and still end up worse off as an investor? Over the years, I've watched multiple boom and bust cycles play out and spent a lot of time trying to understand who really wins and who loses when they do. I'm going to share some perspective that will help you reframe your investment strategy to protect you from any current or future bubble bursting trends. So when you see the signs, you can think critically and avoid the emotional decision making that leads to costly investing mistakes. That question matters today because investors are starting to ask another one. Are we in an AI bubble? Artificial intelligence is exploding into the mainstream. Tech stocks tied to AI are soaring, and many people are wondering whether we're watching history repeat itself. And the answer lies in a surprising lesson from the dot-com bubble, one that may matter just as much for investors today. By the end of this story, we'll see what the dot-com bubble actually teaches investors about technological revolutions and why predicting a bubble isn't always enough, and how investors can participate in powerful new technologies like AI without exposing their entire portfolio to a single trend. Because the real challenge during a technology revolution isn't just predicting what will happen next, it's knowing how to invest while the story is still unfolding. To understand why that question is so complicated, we have to go back to the last great technology revolution, because the dot-com era revealed something surprising about bubbles, a lesson that may matter just as much for investors today. The year is 1996. You get a CD in the mail from a company called America Online. It promises access to something called the internet. You install it on your computer, your modem dials, and suddenly the world feels like it just got a little bigger. Most people have no idea how much the internet is about to change everything.
Listen, I can't go to the game today. What? I've got to send something for my mom's birthday. It's tomorrow. I'll then book plane tickets for our trip next week, and my kids got to go to the library to look up dinosaurs.
Hey, we can take care of all that before we go.
Yeah, right.
Oh, with America Online.
America Online can do all that?
Wall Street is starting to notice. A new company called Netscape goes public in one of the hottest stock market debuts in history. A small online bookstore called Amazon begins attracting attention. And suddenly, every week, another internet company is going public. Investors are excited. The future feels limitless. But not everyone is convinced. Some analysts are already warning that prices are getting out of control. Companies with no profits, barely any revenue, yet stock prices keep climbing anyway. To them, it looks less like a revolution and more like the early stages of a bubble. And history tells us what happened next. By the year 2000, the dot-com bubble burst. The NASDAQ fell almost 80%. Trillions of dollars vanished. That's one of the most frustrating truths about investing. Bubbles can last much longer than anyone expects. Even if you correctly predict how the story ends, you can still lose money along the way. Because while many dot-com companies disappeared, the internet itself was not a bubble. It became one of the most transformative technologies in history. The revolution was real. The prices simply got ahead of reality. And that's why the dot-com era matters today, because once again, we're watching a powerful new technology reshape the world. Artificial intelligence. And once again, investors are asking the same question. Are we in another bubble? Just like the internet in the 1990s, AI suddenly seems to be everywhere. Companies are racing to build AI into everything, and investors have taken notice. Tech companies leading the AI race have seen enormous gains. Large technology companies are spending tens of billions of dollars building AI infrastructure, and investors are pouring money into anything connected to artificial intelligence. But here's the important lesson the dot-com era teaches us: two things at the same time. First, bubbles absolutely exist. But second, technological revolutions can still be real, even when markets get ahead of themselves. So the real question isn't simply, is AI a bubble? Because the internet looked like a bubble in 1998 too, and yet it still changed the world. The better question might be this: if artificial intelligence is as transformative as many believe, how should investors think about it? without falling into the same traps as the dot-com era. The biggest mistake investors made in the late 1990s wasn't believing in the internet, it was misunderstanding how markets behave during technological revolutions. And that lesson may matter just as much today. The hardest part of investing in a revolution isn't predicting the future, it's staying disciplined while it unfolds. So artificial intelligence could be a bubble, but it could also be the next major technological revolution. What should investors actually do? Trying to perfectly time the market probably isn't the answer. Instead, a more balanced approach is usually more effective. First, you want exposure to the companies that are actually leading the innovation. The businesses with real competitive advantages, strong balance sheets, and the ability to adapt as technology evolves. Not every company talking about AI will succeed, but the leaders in technology often end up capturing a huge portion of the long-term value. Second, it's important to be cautious about the most hyped companies. During every technology boom, some stocks become extremely expensive because investors pile in expecting massive growth. And when expectations get too high, even a small disappointment can send those stocks to fall quickly. Third, investors should think carefully about which industries might be disrupted. Technology revolutions rarely just create new winners. They often reshape entire industries. So part of smart investing is constantly asking which companies might benefit from this shift and which ones might struggle because of it. And finally, diversification still matters. Even if AI ends up transforming the global economy, it shouldn't be the only story in your portfolio. Because the goal isn't to bet everything on a single technological trend. The goal is to participate in innovation without exposing your entire portfolio to it. History shows that technological revolutions create incredible opportunities, but they also create periods of excitement, speculation, and sometimes bubbles. The real challenge isn't predicting exactly when those bubbles will form or burst. The challenge is building a portfolio that you can benefit from innovation while still staying resilient when markets become unpredictable. For more content like this, please like and subscribe.